Good morning, traders. Hello there. Hope you're doing well and hope you had a great weekend. The most hope of all goes to some decent price action this week because I don't know if I can handle another week like last week. Dire straits it really was in those markets, wasn't it, eh? Not fun at all. What did we ended up doing 27 trades, I think. 27 trades for 2.7%. I really hope we're not going to look at another one like that. Hopefully, we're deep enough into Q4 now where we should start to see some more money coming in. And those trading volumes should increase. What are we on, the 14th today? Yeah, 2 weeks into Q4. It's got to be this week, doesn't it? It has to be. Presidential elections coming up. We got market drivers. There's a lot of cautiousness going on at the moment because of the Fed, US economy, looking at possible recessions and so on and so forth. But hopefully we're going to start to see some better trading volumes. All we can do is hope, isn't it? Good afternoon, Matthew. Good to see you, buddy. Hey, Michael, Evelina as well. Good to see you. And Nadia. Hello there. Owen OC as well. I know you're there, buddy. I know you're watching. So good afternoon to you, sir. Good to have you here, and welcome officially to the trading room. And Paul as well. We've got lots of people going on in there at the moment, don't we? Good afternoon, Paul. Hope you had a nice weekend, bud. So let's get cracking then. First of all, let's check out what's going on with our fundamentals this week. So starting from the top. Alrighty, so Tuesday, unemployment rate for the UK, 4.1% remaining stable. I don't see any reason for that to truly change at this point in time. But look at the ZEW Economic Sentiment Index for Germany. Woohoo! It's an absolute beast. I don't know if someone's, I think that might be a typo. I mean, seriously? What, a 10 up from 3.6? Who knows? I'm not sure about that. We're gonna have to wait for the actual figure. I mean, the ZEW sentiment index is actually quite a big one for the German economy. So, I mean, that's gonna be pretty shocking, I think, if it comes in anywhere near there. We also have the CAD inflation rate annual data. That's an important one. 1.8% down from 2. 2% is the inflationary target. So 1.8 is a bit of a dip beneath. But nothing major. I don't think there's any cause for alarm if that does come out as forecasted there. Moving on into Wednesday, we have the UK inflation rate. Again, looking at the annual figure, that's looking at a 0.3% decline from 2.2 to 1.9. This will be very bearish for the pound, but at the same time, probably going to be pretty good for the UK FTSE. But because of the nature, of course, of the UK FTSE index, the fact that it's very, very sensitive to global geopolitical elements, we're just not quite sure if that's going to be the thing that gives it that nudge to the upside. I do think you're probably going to find a bit of a trading opportunity as a result on the low timeframes. I just don't think it's going to be in anywhere near of the same realm as the US CPI has on, say, for example, the Dow Jones Industrial Index, which is incredibly sensitive to US CPI. But the other thing, of course, is that's at 7 o'clock in the morning. So unless you're a real early bird, Nadia, I'm looking at you. I know you're an early bird. But for someone like myself, I don't actually get to the charts really and start preparing until about 7:15, 7:20. I have the morning school run and stuff like that to take care of, so yeah, it's a little bit dicey for me at that stage in the morning. Also, I'm terribly grumpy, and I I don't trade well when I'm grumpy, so that's that. Moving on Wednesday, we do have ECB President Lagarde's speech. That's at 20 to 8 in the evening GMT time. So obviously, if you're in Australia, as I know, a couple of you guys are, it's going to be a bit out of your reach for that one. For us, though, it's also going to be a bit late. I mean, 20 to 8 in the evening is a bit of a pain in the ass for most people, isn't it? Really, I guess if you're in like the South Americas, maybe Colombia and stuff, it'd be all right. But yeah, I don't think it's going to be too much of a market impact event anyway. You might see some euro volatility. You're probably going to see a little bit of volatility in the DAX at that point in time. But then you could put that down to the end of the trading session anyway, because it is 20 to 8, and looking at that rollover from the end of the US and into the beginning of the Asia session. So again, I'm not going to say that that's a big event and that's something you guys need to watch out for. It's just something to be aware of if you have potentially, or if we, by that point in time, this is Wednesday, so we may have some European positions in, I don't know, Euro Yen, Euro NZD. We may have to adjust our portfolios to maybe hedge off some risk, mitigate some risk because of it. But we'll cover that anyway we'll cover that tomorrow evening anyway. Moving on to Thursday, European Union, we got the ECB rate decision this week. So deposit facility rate, of course, and then the ECB interest rate itself, looking at a 3.4%. Down from 3.65%. So actually looking at that one coming down just a touch. Again, a lot of the market's pricing this in already, so I don't think the level of market volatility or impact is going to be that significant. All right. So honestly, maybe look out for a bit of a nudge again in your euro pairs. If we're looking at assets like the EU50, we're probably going to be done and dusted with them anyway by 1:15, and we'll be awaiting our US Open in the afternoon anyhow. So verdict's still out at the moment on whether or not I'm going to be streaming it live. You know what I'm like, guys. I'm kind of open to do whatever the community as a whole wants to do. If you want me to cover it and provide some analysis of it as we go on in real time, then that's absolutely fine. If you'd rather we just got stuck straight into the markets themselves and looking at the charts, then that's what we'll do. It's kind of down to you really, and take a majority vote on it. And then on Friday, we don't really have too much of anything, team. We got building permits in the afternoon at 1:30 p.m. On the Friday. We've got UK retail sales, which kicks the day off at 7 a.m. in the morning. So look, based from a fundamental perspective and looking at the economic viewpoint of the week, it's an incredibly quiet week this week. The major events in the week, and I say major to be honest with a real big pinch of salt, ECB on the on the Thursday afternoon, that's one of the big ones, and we've got the inflation rate for the pound at 7 a.m. I don't even want to include that as a major one because frankly no one's going to be around trading then anyway, really. We're going to be waiting for the European session, which begins an hour after that, and the dust would have already settled by that time. So there isn't really any major fundamental catalyst to drive the markets this week. So we are going to be looking at a sort of sweeping majority towards organic trading volume. We're just going to be looking at technical analysis pretty much throughout the entire week, as the fundamentals really won't be causing too much of a headache for us. So I mean, there's pros and cons to both of that. I mean, fundamentals is obviously quite important, right? Because it does drive that trading volume. But at the same time, it does level the playing field a little bit. We don't have to be watching out for any surprise impacts from things. And the only thing we will have to watch out for is bloody Trump's big mouth on Twitter. So that's about it. That's about where we are. So is everyone clear on that one? Any questions at all? Good afternoon, Scotty, as well. Good to see you, bud. If you've got any questions or anything around that, just fire them away. Honestly, no problem at all. Right, let's have a look over at the charts then. So getting us off to a good start today, we were looking at a DAX short or a DAX long. One based on a breakout retest continuation. The other one based on a counter trend break of structure. It was actually really nice, guys. And to be honest, really, really nice. There were actually two shorting opportunities. The first one was here, which was absolutely beautiful. And the second one was here. So, Owen, I know you're obviously new here. Evelina, I know you're not new in technically speaking, but you are new to the new format, I suppose. Every single trade idea that is posted goes into the fund and into the track record, right? So even though there was an opportunity in here, that wasn't posted before the fact, and so therefore it does not go into the track record or the community fund stuff, right? So only this one has. That being said, lots and lots of market opportunities this morning. There was the one here, there was the second here, there was the third in here, and there was a fourth from the breaker structure there, which went down here. And then there was a fifth on that breaker structure. It went right the way back up to our target profit yet again. There was only one trade that would have hit stop loss, and that is this short. It's the only trade. So you could have potentially had 1, 2, 3, 4, 5 trades, 5 wins, 1 loss, if you were to take every single one of them. A very, very good European Open this morning. I will say that, because last week was awful. If you remember, Monday through Wednesday, I was taking a trade a day in the DAX. Every single one of them was a loser. So it's really nice to actually get back to the charts with a clean slate this week and straight away see the DAX absolutely full of trading opportunities. As it stands right now, though, obviously this is completed. We don't have anything else to do with our European stocks until tomorrow morning. And we will be focusing our attention on our US stocks this afternoon. So, starting from the top of the list then, it's currently, what is the time? 20 or 19 minutes exactly to 2. So let's get through as many of our assets as possible. Probably ending up at around the Euro USD, I imagine, before I cut off there and then jump down to the European stocks. And then tomorrow we can cover the lower half of our FX assets to add to the portfolio. So, let's just break this down to 15 first of all. Natural gas at the moment, relatively choppy waters, still has good structure to the trend. If we look at the daily time frame here, it has been very consistent with this move to the upside. We've been in here since around the 30th of August, end of August, and we've come to a bit of an end here at the beginning of October. We've had a little bit of a drop down. If you can see, this area in here is cash rich. Lots of money in the market, right? We've got a lot of buy-side liquidity entering all the market around here. We had the same at the sell-side stuff on our way down as well, where liquidity was added. We've hit some sort of accumulation stage here. We also have a W pattern, which has been confirmed here via the retest of the midpoint of the W before we get this really big, beautiful breakout. But we never had a retest of this area. So I believe the natural gas is on its way back down with the rest of the energy sector to 2366 and then see the bounce back up to the previous highs. So as an intraday trader, this makes me think, well, can I not take a short once we break the nearest gap? Now this area in here is really tasty, like this area. If we can get a breaker structure below the base of this zone here, then we're going to be looking pretty good to take an intraday trade from around 24.13 to the low of around 23.66. And so therefore that's going to be the trading plan. Now for our point of liquidity here for the breaker structure, that's going to be about there. And then we are going to be looking at a break of structure in here. Stops are going to be about there. Target profit is going to be there. And we're naturally looking at a 1 to 2.5. That's going to be 0.6 return. So fantastic stuff. Now, again, if you are new here, Owen, obviously, you know, I am speaking to you, buddy. I don't mean to call you out here, but, you know, you've got to have the all the facts in place. There are areas inside the trading room that will give you the facts as well. Different channels which have different information in, so I urge you to go and check them all out. 0.25% per trade is the maximum risk exposure we take. Okay, and I'm going to be direct, and I'm going to be very to the point, because that's who I am. Everything you've been taught before, forget it. It doesn't matter. Okay, don't try and bring any old baggage with you from other trading rooms or other trading experiences into this. Of people telling you that you need to be risking 1% per trade or 0.5% per trade or anything. If anyone tells you 0.25, then great, that's a thumbs up. But if they're not, then forget it. 0.25% per trade, and we're always looking at a 1 to 2, a 1 to 1.8 being the sort of bare minimum of the risk reward that we're looking for when we're risk profiling an asset. And that way, we can lose a shed load of trades and still make money. Like last week when I did 27 trades and I lost 17 of the trades, but I still made 2.7% return at the end of the week. And it's that kind of thing, which is why we have the setup we do. So 0.25% on the natural gas short, 1 to 2, 2.5 risk reward. Really, really nice little setup there. We'll just wait to see if that one comes down and triggers in. It is a pending order. Okay, so you can set your chart up, set your trade up. It is a pending order. Getting on to crude, Brent crude more specifically. So again, really nice gap down. Energy sector's been full of gaps this morning from the Sunday open. We did get that really beautiful long last week as well for a 1 to 2.77. We did get another one in there as well, but that one never triggered. That one was removed. We've now finally made it back down to 77.50, and this area here is the one to look out for fresh buying interest. Now that we've dipped our toes in the water here, I would like to think that we're probably going to be looking at further longs. The breaker structure entry for this one is going to be recycled from back here. This is a previously used level breaker structure point. And I'm going to be using this, which is just a recycled zone as well from the last week's trading, as the target profit. So then what we're looking at here is a entry at a nice margin above the breaker structure point, so probably about there. Target profit up at the highs at around 79.55, and we're looking at a 50% between these two zones stop loss, which is approximately 77.618, and that's yielding a 1 to 2.5 as well. Not on purpose, that's just coincidence. But looking really, really nice at the moment, that one. I think it definitely has legs. So long as we can, there is a TRF. And for those of you who don't know, TRF is a technical risk factor. Part of our risk profiling process, we look for the potential risk factors to the trades that we're taking, and that is a TRF, most definitely. It is actually the top and the bottom of a previously formed gap in the market, and it is the beginning of the latest gap in the market. And so therefore we do want to be watching out for this. Our entry is very close to the TRF, but that's just the nature of where we are at the moment. So if the market starts to stumble and you start to see this happen, have no fear. You know, we're only risking 0.25%. If the market dips down below here, you're probably looking at a loss. If it comes down below that area in there, it's probably going to go straight to stop. So I will let you guys decide whether you want to get out or you're just going to let it run right to the stop loss and call it a day. Every single one of the trades that I am providing here are all set and forget. Every single one. So there is no ambiguity whatsoever. But some of the more experienced traders who have followed my teachings and stuff over the years, they do manage their trades because that's how I teach it. To trade manage. So if you have a counter trend break of structure, something like this that happens, then you do have the capacity to get out of the trade early and save yourself from incurring the full allotted risk. Okay, next up, gold. This will complete our commodity basket as well. So gold, I got so damn close to the alarm there. I am going to remove that though. There's no point having it in there anymore. So gold at this stage, I mean, it's come up to reach this area in here. Really nice point of liquidity up at these highs. Unfortunately for us, this did so at a very, very interesting time this morning at around 8:15. We actually got the break underneath structure at about 10:30, which is perfect. But I was not available to take the trade or even spot it for that point. So yeah, a bit of a shame, to be honest. Looking at the rest of the move, there is more of an opportunity to take a trade back down to around 26.24. Not that we have to have a trade, obviously, in gold, but it's just a pretty clean setup. So if we can get down below, let's say this area in here, these zones are quite wide, but it is to account for the very low wick and high wick of both of these points. But if we can get down to there, then we have a shorting opportunity down to this point. So you're probably going to be looking at a 1 to 1.85 or something like that. So yeah, I'd say around a 1 to 1.85 for the gold short. However, there is another opportunity in here for this zone here to be used as the breaker structure and then look at a rejection trade. So the markets come from a big nice point of liquidity up high, this area in here. It's coming down to another really nice point of liquidity, which has been used as an inflection point because we've seen big retests, big continuations. And so therefore we would be looking at the rejection of this area and the price action coming back up to retest the previous high. And by doing so, we gather a long. So break a structure, target profit, and the stop loss. Now the risk reward on this one could potentially be very, very nice. I mean, we're looking at maybe a 1 to 2.8, maybe a 1 to 3 return on that long. So this could be really nice. Just a heads up though, right? Because of the two different entry barriers that we're talking about here, the short can most certainly be a pending order. The long cannot. The long can only be a pending order once the price action comes down to this point. If we're setting up a pending order here, what's going to happen? Price action could come down, trigger the trade, come up a little bit, and then come back down because it hasn't completed its run into the money. Now, this is a lot of money in here. Lots of pending orders from banks and institutions will be resting, waiting for trigger at 26.46 to 26.42. And so we need to be well aware of that. Wait for the market to come down, trigger the pending orders from the banks and institutions, and then we ride the wave, the same wave the banks have made for us, ride the way back to the top at 26.65. Rightio. Aussie CAD. So Aussie CAD at the moment, again, just these are old trade ideas, guys, last week's stuff. Really nice bear run today. I will say that. Really, really nice bear run today. Unfortunate for us as well, because obviously this triggered here at 12 o'clock. It's already gone straight the way down to its proposed target profit. So it's kind of gone on without us. No retest as well. I would have liked to have seen a retest on the entry back into 92.70, which we did not get. Looking at this one at the moment, though, I think we could be in buyback territory. This is certainly a nice point of inflection. We've seen the big institutional sell point from there to there. This is from the RBA. No, it's not. Sorry, that's from... What did we have at 130 last week? Was it some inflation metric? I can't remember what it was. I think it was US PPI, I believe. I'm sure if Scotty's around, he'll tell me what it was. But I think, yeah, well, obviously it was something fundamental anyway. We had the shot down, we had the bottoming out, and then we had the buyback. So there's obviously a lot of money down there at around 92.45 as well. I will be looking for the buyback opportunity from there. The breaker structure is kind of difficult one to ascertain right now. I want to see what the market looks like following the push into liquidity and then the rejection. Okay, so again, this is speculative at this point, but we do need to see what this area looks like. Then we look at the buyback. So where does the breaker structure come into play here? There's a breaker structure point based on this area, but it's not adhered to from this. But do we even take that into consideration? Because that's a news-driven move, right? So we don't really want to be taking that into too much consideration. So we're really sort of relying on the fact that the breaker structure is going to be clear for us to read at this point. So there is some ambiguity here, and I'll try and give you guys a heads up as best I can, as long as I'm around to do it. The trade idea is probably going to be something like this for a 1 to 2. And yeah, I mean, that's, yeah, about that. That's looking pretty good. So we'll just have to wait. Obviously, we can't set a pending order yet. It's not made its run into the money area. We'll just have to sit tight and see what happens over the course of the next maybe hour around the US Open as well. So Aussie yen at this stage, a little bit of a murder scene instrument. Not enjoying it. No trade. Aussie NZD. Oh no, definitely not. There is the potential to repeat the short that we did. This is another short from last week. I mean, that's possibly not too bad, is it? This is absolutely gross. But this isn't too bad at all. Could we be looking at the same setup? Copy and paste. Bring that over there. I mean, it really is as simple as that, isn't it? What are we currently on? 0.05 down. Yeah, that's not too bad. Yeah, that's not too bad, guys. I'm going to include that. I'm gonna set that up right now. So stops 110.46. Entry point 110.37 on the dot, and then the target at 110.19 on the dot. Yeah. Alrighty. Yeah, let's do it. That's not bad. 0.25 pending order. Right, Aussie dollar. Again, relatively nice sell-off, but, and it's a big but, it's a 0.6% loss instrument already. It's had a pretty big move for a Monday. It's also trading on top of a point here. We've had some pretty big inflection areas away from this area, so we need to clear this out. The other thing, technical risk factor. Don't know if anyone can see it yet. Bang. Technical risk factor right in there. Rebound, retest, continuation. A lot of institutional selling and buying going on at around this area here. All right, so big fluctuation in asset price. We need to be taking these things into consideration because this is where we're trading into. We're not going to have a target down there at 66.30 and just ignore this. So US dollar and the Aussie are not a good combination for us right now. We're going to leave that one alone. Possible buyback opportunity, maybe, but we're nowhere near to getting that on side yet. So we're going to leave that one alone as well. CAD against the Swiss. Yeah, so this one's come back up. Got a perfect retest of that area in there. Strangely enough. Oh, that's not nice, is it? Am I going to have to... God, that looks great. Oh, fantastic. So you'll understand over time I can't stand having ridiculously wide zones like this. It's sloppy work. So for me, I would much prefer to have one zone here and then simply have another zone here, which makes no difference to the previous price. So that's like that, thin that up, and that's where we are. So could we look at a CAD Swiss short? Could we look at a CAD Swiss short from here? There's a double point there. We got the single above. Oh, it's a risky business, isn't it? I mean, apart from that, though, everything else looks really nice. We got a beautiful breaker structure. Look at that point for that structural point there. Right, so we've got the anchor point in the chart ready for entry. We have got that TRF. Seriously, this is really annoying. Click in, thank you. So we've got this point in here that we need to contend with. Now, just for the sake of keeping everyone's visuals, we'll make that like a deeper shade. So we've got entry into the TRF and then the target profit down below. Or, of course, on the other side of the market, we actually have a really quite a solid trading opportunity there as well, don't we? But it's almost got the exact same. It's almost got the exact same TRF because the TRF is just above the entry point there as well before we make it up to our target profit, which is here. Well, yeah, it's a slightly difficult one, this one. I think, yeah, I mean, that would probably be the safest bet for this would probably be to wait for a clearing of 62.68. We'll forego that. Oh, no, will we? Oh, no. No, I tell you what, guys, I've got too much cold feet about the CAD Swiss. It's only Monday as well. I'm gonna wait to see the CAD Swiss and what it looks like tomorrow, and then we'll go from there with that one. It's just not ready for me yet. Right, CAD Yen. No can do. Euro Oz. Really nice run this morning. It's not really stopping it. Just any random place, isn't it? Let's look at the daily. So obviously the daily indicates a long bias. Got a lot of institutional buying going on in here. We can see all the condition of the candles as well, right? We have the big moves, and then we have the slowdown. This is like the plane landing where it slows down. Has had a lot of momentum, slowing down. Hits the landing pad, refuels, gets the new set of passengers. Bang, takeoff. Full thrust and full power in the plane. Now we're having a bit of a rest mid-flight. So for what we need to see now, essentially, is the breakout of this area in here. Not a wick, but the actual candle trading above. But because of where this area is here, we do have a little bit of a trading margin. So we need to be able to tell if that's going to be enough for a trade idea or not. So that's quite clearly articulated on the 15-minute time frame. I think that looks like a good enough margin, personally. Now, we haven't actually had a decent retest of our most recent point of interest here. Or have we? Is that the retest that we've just looked at? To be honest, it might be. It doesn't look too good, though. So what I would wait for is another retest of said level. And then the trade from there to there. For a 1 to 2. So what we're looking at here, ladies and gentlemen, is a push back into liquidity and then the rejection of liquidity. And it's at that point when the market's trading here that you can then put the pending order in wherever it needs to be, wherever that break of structure element is going to be. So the trade might be a 1 to 2, it might be a 1 to 1.8, it could be a 1 to 2.8. We don't know exactly where it's going to be yet. Just as a guideline, a 1 to 1.2 is essentially what we're looking for from the initial perspective. Right, Euro Yen. Trading up against cash-rich areas right now. We are certainly out of cash neutrality here. That's that. Are we looking at a breakout above, though? Where does the trend... Yeah. This is a difficult one. I think this is long. I really do. We shed so much weight when we had the chain liquidation take place in August. So much yen weight. Now we're down at these lows again. I really do think the yen is back to its old tricks and probably going to be going down. So for me, when I see the price action building up at a point of liquidity like this, it's because there's an accumulation phase going on of orders, which is going to lead itself to the big breakout, where we see the nice big full-bodied bars breaking through the point of liquidity that we're, sort of discussing. So like a bar like this, for example. And so this is not always a bad thing. I actually quite like this because of the nature of what comes after, potentially. Whilst we are trading inside this margin, though, we also have the opportunity for a range, because on the daily it looks crap, but on the 15-minute time frame, this is just really good trading opportunity. So we could potentially look at a breaker structure short, pending order instantly in the market at around that area there. Short entry here. Target profit down at around 162.46. Stop loss going to be at around, I'd say... I mean, look, guys, at the end of the day, if we have a 50% stop here, that's going to be a 1 to 3.6, and I'm just not that greedy. So I would be going much more favorable option for the 1 to 2.8. Still looking at a really nice return on investment here, but at the same time, it's really allowing us some more freedoms, flexibility with the trade overall. If it wants to go and fly up through there and have a wick attempt at stopping people out, we're not going to be, hopefully, in the collection of people that do get stopped out as a result. So 1 to 1.3. Look, I mean, that's absolutely superb. So we'll see how that goes. The long, I'm not going to do anything with right now. I do think there is a lot of good capacity for it, but it's just too soon in the process. So we're not going to carry that out. Right, guys, let's have a look at the time quickly. 2:05. 2:05. Right, let's get on with the... we'll do the Euro NZD, and then... We'll do the Euro NZD, the Euro USD, and then we'll move on to the US stocks. And then we'll cover from the pounds down tomorrow. I do the second half of the funds adjustments. So Euro NZD right now. Okay. Not really a huge fan of that. A lot of price indecision down here at the moment. The daily time frame certainly clears up the noise like it usually does. And as a result, we have seen a really nice, power and away from the cash rich area down at 175. But where we're trading at the moment, high risk territory. We've got the floor of the market in there. And that is exactly where the market's traded up to now and rejected. So, not to say there is no trading opportunity, because at where we are right now, this is the trading margin. So don't worry, there is a trading opportunity here for us. We just have to be prepared to probably deal with a bit of volatility around here. So TRF is in the middle. Don't worry, this isn't a point that you need to fear. This is a point that you just need to manage. So we're going to be looking at breaker structure entry. Yeah, again, probably looking at around this area in here. Looking for a long, pending order, 0.25% risk. Entry approximately 179.83. Stop loss approximately going to be 179.65. Target profit exactly where it printed already at around 180.42. That's yielding a 1 to 3.3. Now 1 to 3.3, ladies and gents, is too much. Okay, sometimes we do get crazy risk rewards. Last week we had a 1 to 4 in the NAS 100, but we don't want to make a habit out of it. So if I can squeeze in another level of protection to mitigate even more risk for this position, then I will, and while still being able to get a decent risk reward. So looking at the level here, we've got a really nice inflection, lots of points, institutional selling and buying happening around here. We drag this one back in time. We can see that here was a really nice level of selling off from the banks. So if I can just bring my stop loss down to this area, nice little margin underneath this zone, also the break of structure zone, and now we've got a trade that's yielding a 1 to 2.8 with double walled protection inside the stop. Again, obviously, we're always taking risks. The bloody thing could be a stop out, but having this level of protection in whilst we have a 1 to 2.8 potential return, that's really good for us. Happy days. So Euro NZD, that's the order. Right, folks, let's jump over to the US markets here. Let's have a look at what's going on. Set you guys up for this afternoon. So first time I'm actually looking at the US markets with you right now. This is in real time, obviously. The US 30 Dow Jones, obviously, pretty simple case. But the NAS 100, look at that go. Daily time frame up here. We are ever getting closer to that previous high, the all-time high level. Not quite yet, not quite there yet, but certainly on our way. Now, this point here is the breaker structure point. So because of this being on the daily time frame, I should imagine another couple of days of it rallying back up to the previous high, which is going to be our all-time high point there. And so therefore, we've got some really decent trading margin to be working with this week. Looking at the 15-minute time frame, we've just had a break close retest of that as well. So everything at the moment is looking very bullish. And the NAS 100 so far has had a percent change of the day of 0.73%, which is probably about half of its average trading range. Now, looking at the NAS at the moment, I'm probably going to say let's wait for a pullback before entry. I don't want to be entering in at the very top of a rally like this. So if we go down to the 1 minute chart, we understand where we are on the 15. Price action pullback from up here. Probably going to be heading down to somewhere like this. And then we get the surge. So what I'm going to say is It's the 14th. You are absolutely correct. Blah, bugger. Yeah. Well, I mean, it will still be trading, won't it? But yeah, probably not gonna be the one. Oh, thank you, Matthew. Yes, yeah, thanks, mate. Cheers, appreciate it. Bugger. Well, that kind of foils the plans, but that's fine. I mean, it's a good place to tie it up there anyway. I think because let's face it, we've got a lot to be working through. I have no doubt you guys are going to have to get back onto the stream after it finishes up and then watch it on replay and start pausing and putting the positions in if you've missed stuff out. But ultimately, guys, we have a short bias in the NAS 100 with a short position set up via pending order at 0.25. Oil at the moment, we are looking at the long breaker structure element here. It's actually pushing there now and on its way back up to 79.55 as per the bias in the position. So that one's looking pretty good. We've got gold, trades on both sides. In order to take the long, we need to see the push into liquidity first. So none of this is even relevant at the moment, but that one's going to have the star of blue. Aussie CAD, we're looking at the push into liquidity, which it has now done. And it is pushing its toes into liquidity, so we could potentially see the buyback take place from here. So that one's looking good. Aussie Yen is a no-goer. Aussie NZD, this one's waiting, pending order at 110.37. And it's had a big jump back up without us triggering the trade, which is really nice. That's why we always try to work with a bit of a margin of entry below the zone that we're looking to get in on. So that one's looking okay as well. It's a no-go on the Aussie dollar. No-go on the CAD Swiss. No-go on the CAD Yen. Euro Oz looking at the long after the retest of said level and the continuation up to 163-ish. So that one's looking good. Euro Yen, potential short with the range. Potential for the buying into it once it breaks the 163.80 area. We start getting the banks more on side with us. But at this stage in time, we are going to be focusing on the price equilibrium element here, which is the equal highs, equal lows. So that's quite nice. Looking at that one being a short first and foremost. And the Euro NZD for the long via the breaker structure there. And that's where we are. So to begin with, excluding the US markets, we have the 1, 2, 3, 4, 5, 6, 7, and 8 trading assets with opportunities. So hopefully we'll get a couple of those on side and in the bag. We'll just got to wait. A lot of them are relatively, I'd say, very standardized intraday trades. We might be waiting anywhere from 24 to 48 hours for completion. But guys, listen, I'm going to wrap things up there. We are now at almost 2:15. I hope you've enjoyed the session today. It's good to see you all, obviously. Good to catch up with you. And I hope you have a really good trading day today. Take note of everything that's been covered in the session. If you've got any questions, please feel free to fire them out into the chat and I'll pick those up, as and when throughout the day. And I look forward to catching up with you to see how things are going on. So take care, good luck, trade safe, and I'll see you then. Thanks, guys. Bye-bye.